Welcome back to the Wealth Witches podcast. I'm your host, Katelyn Magnuson, back with some juicy, not so boring end of the year reminders for you in this episode. This is all about recapping the year and wanted to walk through and just keep it really simple, super short, and run through the basics. So if you are a business owner, especially if you're DIYing your taxes, but even if you're working with another professional, there may be some things for you to learn here. So stay tuned in. We're going to try and keep this from being, a little bit of a snooze fest, like I know it can be sometimes. So without further ado, here is your December checklist. Number one, you want to reconcile November. And if you're going, reconciling, what does that mean? Reconciling, for those of us that are maybe under the age of 40, is balancing your checkbook. And what that also means for those of you that are like, funny joke. Essentially, it's matching your transactions and your accounting records and making sure that they match your statements for your banks, for your credit card, etc., loans, all of that. Because what happens is when you go through and you have an accounting software, right? Maybe you have Xero, maybe you have Wave, maybe you have QuickBooks. If you have QuickBooks Self-Employed, you can't do this. And that's one of my many, many gripes with QuickBooks. I should be sponsored not to support them at this point. However, you can't reconcile in there. And the reason that I don't like that is because it doesn't give you as much oversight as I would like to see, specifically when it comes to your transactions and your business. And so what you need to be doing here is reconciling is going in, like you do all your categorizing, right? Which is when you actually assign the category. So you go Adobe, software and subscriptions, and you have Canva, software and subscriptions, and you have Amazon, which make sure you get your invoices or your receipts for these. Amazon, let's say in this example, it's job supplies or it's office expenses, right? So you're doing the categorizing. That's great. That is a huge step. If you are not already doing that weekly, if not monthly at the very latest or least, you should be, because it's really difficult for you to potentially remember what those transactions were. Granted, you should always have receipts and invoices, and we can talk about that more later. But categorizing on a monthly basis at minimum is really important for that. Then what you should be doing at the end of the month is you get your statements. The month closes, your credit cards wrap up, your statements come through, and you get that little notification. Maybe that's like, your statements are ready. And you're like, great, why do I care? Because to reconcile those, you take your statement. I actually print mine because, hello, accountant. If you're watching the video, I actually have a printer right here. I'm going to say really good things about this printer. I love this printer. It's almost 15 years old. It doesn't have to have a subscription. It's a copy scanner printer. And yes, we are hopefully including this. So if you're listening, I'm an HP old school printer stan. However, back to this, print out or split screen your statement. What it will do, if you've done this before or you've had someone doing your books, and this is part of what we do for all of our clients, is you hop in and you say, what did you start at? So let's say it was $1,000. What did it end at? Let's say it was $500. Cool. So you put your starting and your ending balances and it matches your statement, and you put your starting and your ending dates. Let's say it was November 1st and November 30th. Then you should go through and you should check off basically, or make sure that all of the transactions in that period are transactions that are reflected on your statement, because it's simple math. You have additions and subtractions from your account. And those, when you start at $1,000 and you put in all the additions and subtractions, it should match whatever your ending balance on your statement is. Now, what causes this to not match? Because you might think this is a little redundant, superfluous, right? It's not. I can't tell you the number of times that we get into someone's account. They've been DIYing their books. They've been doing a great job categorizing. They've been making sure their accounts are connected. They're doing all the things, or so they think. They're not reconciling. And what happens is, softwares disconnect, transactions get duplicated, transfers don't get matched appropriately. All of that can cause your balances in your accounts to be off. Why does this matter? It may mean that you're missing out on deductions because you're underclaiming expenses or you're overclaiming income. It may mean that you're paying more in taxes than you need to be paying. It may mean that your ownership draws and your basis in your business is incorrect, especially if you're an S Corp or you're a partnership. All of these are really important things. And it's why it's so important that if you don't love doing your bookkeeping and like eat, sleep, and breathe it and feel really confident with this, that you get help or that you reach out at least once a year and like have someone like us or someone else that you trust go through it. So number one, reconcile November, categorize, reconcile, make sure everything's balanced. If it's not, now's kind of the last time to like raise your hand and be like, I need help. ooh, there might be a whisker in January, and then you get like really, really going with tax season and the new year and the holidays, and it gets really busy. So now's a really good time to check. And if you haven't done the rest of the year, it's a really good time to sit down, put maybe like your favorite comfort show on or your favorite podcast that you've heard, and just background noise it and knock it out. You want to categorize your expenses for all of Q4 and before, so November onward. You can also, if you're listening to this, you're most of the way through December, try and catch up. You can't reconcile for December yet because the month hasn't closed, but you can categorize those transactions and it gives you a really good idea of what your profit is for the year, which brings us to our next point. Estimate your Q4 taxes. Generally, unless you're expecting any really large payments to come through this last little bit of the month, you're in a really good spot to have an idea of what your profit is and to do some math on that. If you need help, we have a quarterly estimated tax calculator that'll give you an idea of what you owe. If you work with a tax professional, they may give you an idea. Or if you look at your income for the year and you compare it to prior years, it can give you a pretty good idea. If it's similar to the year before, you're probably going to have a similar tax situation. If you didn't pay estimates and you owed last year and your income looks about the same, probably going to owe about what you owed last year if nothing changed. So it's a good way for you to get an idea and know what's coming through. And the other thing that you should be doing, now is a really good time, and we have a blog all about it that we'll link in the notes. Now, before the end of the year, is a good time to decide if you need to make purchases. And when I say need, these are for needs, not wants. You can always make wants. I'm not here to tell you not to. We are not buying things. Repeat this after me. We are not buying things solely to decrease what we owe in taxes. This is not Schitt's Creek. This is not the write-off people. One of my favorite memes, gifts, whatever, I don't know, to use this time of year because it happens. And I get asked November onward, do I need to be buying more to save more in taxes? The blog does a really good job of laying it all out. Long story short, no. There is strategy around whether it makes sense to prioritize a purchase this calendar year versus next calendar year. And the very long story short is, do you expect to be in a higher tax bracket this year or a higher tax bracket next year? Because if you're in a higher tax bracket this year, maybe you're pregnant and you're taking leave. Maybe you chose a slower year next year. Maybe you're relocating. All of those can be great reasons that your income may drop. Maybe you need a new camera body and it makes more sense to buy that camera body then before the end of this year. On the flip side, maybe this was your slow year. Maybe next year bookings are crazy. They're looking so good. It may make more sense to wait until January 1st to make that purchase. Things to be thinking about, because maybe you're in the 24% bracket this year. Maybe you're expecting to be in the 32% bracket next year, which means that you effectively are going to get a 32% discount next year instead of a 24% discount this year on that purchase. So be thinking strategically. We're not ever just buying for the sake of buying, but we're buying things that are necessary and important with intent. So sending W-9 reminders. We're going to do more posts about this on Instagram, and they may already be out by the time this is out. So go check or pop a DM our way. I will do my best. It's myself and one other person in there. So we will do our best to send relevant information over. If you're a tax or bookkeeping client of ours, we have you covered. You're getting a bunch of information. You probably already will have by the time this is out, but W-9 reminders are important for anyone that you have paid $600 or more for business services in this calendar year. Just because you get a W-9 from someone doesn't mean you have to issue a 1099 to that person. But in an ideal world, and this is something to implement, especially for this coming year, especially if you're listening to this early in the year, but whenever you're listening to this, when you engage with someone for services, when you sign a contract, before you pay them, you should get a W-9 from them. If you're going to be paying them cash, check, Zelle, Venmo, carrier, pigeon, you name it, wire transfer, ACH, etc. You get a W-9 then, because we all have the best intentions. Relationships sour, things change, people move, people get sick. That is the best time when that contractor that you're paying has the most incentive to get you that W-9 is before they've done work for you and before they've been paid. Get the W-9, save it in your Google Drive, save it in your folders, save it. I don't care where you save it. Use an online service. I love Gusto for this specifically. We pay all of our contractors through Gusto specifically for that are not already paid, via credit card or their own invoicing system. This is again for people you're paying cash, check, Venmo, Zelle, ACH, etc. You get the W-9s from them, and then Generally, you would work with your tax person to see who needed 1099s and who didn't need 1099s. If you have questions or if you need help, holler. The next thing that you should do is you should review your subscriptions. This is something that I actually do quarterly. I like to go through and I do a deep dive and I review my software subscriptions. Am I still using these? Do we have too many users, especially now that our team has grown or will change size and we'll have people coming and going and seasonal employees and all of that. So it can make a lot of sense to review. One, am I still using this? Is there something else that I'm using in its stead or something that does this that makes sense for me to sunset? Be a really big savings. Same thing that I do every time I see a renewal come through. I actually just sent one over to someone the other day and I said, hey, this is getting ready to renew. Do we still need to keep this active? And it was a website subscription. Yes, we need to keep it active. It's a domain. It redirects here. Here's why. Cool. Totally fine with the answer being yes, but it's still being intentional about making sure that things aren't just getting forgotten in the background. Like, I can't tell you how many times it's happened more than 3, which, if I had a nickel, would be weird. Doofenshmirtz style, but they've been with us. We're in 0 and they have a QuickBooks subscription that they've had for 6 months and we flagged it, hey, FYI, you still have this, like you may want to go cancel because we're doing everything in here. And they're like, oh yeah, thanks so much. And they'll just forget to go cancel. It's really, really easy. And like one $15 subscription is $180 a year. Those subscriptions stack and add up. So I highly encourage you to go through, like I said, once a month is a little much. Once a quarter is kind of the bare minimum that I would be doing. It's a really good cadence and you get a good feel for it. And then also if you have anything that you pay for annually, anytime that annual subscription reminder comes up, that's a really good time to be looking at it as well. So I hope this was helpful. I hope it jogged your memory and gave you a little bit of a incentive. I will be talking over on Instagram, both on the Freelance CFO, but specifically on Katelyn Magnuson and on TikTok about some vision boarding that I'm doing and some end of the year planning that I'm doing and what's to come for 2026 and beyond. And I'm really excited. So looking forward to hearing yours. Would love to have you come interact over there. I am making social and really getting in there again because it's something that I miss getting to do. And one of my favorite things actually of being a business owner is connecting with everyone. So I hope you have a wonderful holiday season and I'll be back soon.
That's a wrap for this episode of the Wealth Witches podcast. I hope our magical money talks have left you feeling empowered and inspired. Remember, wealth isn't just about dollars in the bank, it's about abundance and financial freedom in all aspects of your life. I'm Katelyn Magnuson, encouraging you to keep challenging the status quo and embrace your inner witch on this financial journey. Until next time, stay magical.